Welcome everyone to the Vested Interest channel. This is Shane, and in this video we are going to cover our weekly portfolio update. We did add $798 to the portfolio in new capital, so we'll cover what we bought with those funds, any dividends received, any options we were in. And if you could share the videos with anyone you think that might find value in the content, hit all of the buttons down below. It really does help out the channel. And watch time, if you could watch the videos to the end, that would really help as well. That is one of the other metrics that the YouTube algorithm looks at. So let's jump into the video here. First up, options. We did have a options play here on Lam Research, ticker LRCX, out of the information technology sector. One contract we sold to open on 9/22, which was last Monday, for again LRCX, with an expiration date of September 26, strike price of $145, which just means if the stock price was $145 or above, someone was willing to buy these 100 shares. That's what the -1 represents. One contract equals 100 shares. So someone was willing to buy shares of LRCX at $145. And for that, I received $35 in options premium minus some fees, which is the $34.47 total. Now, it did expire out of the money, which means it was below the $145 strike price. So I keep the shares of LRCX and I keep the options premium, and we'll possibly look to do that again next week. We also received some dividends on September, on September 23rd, $231.89 total, broken up between two different positions. Vanguard's international stock market here, ticker VXUS. This is everything minus the United States stock market. We received $1.08. This is a new position, so we don't have a lot of shares here. I think 3 or 4 shares right now. But we did receive our first dividend here, $1.08. We do have the DRIP set, which stands for Dividend Reinvestment Plan. So this $1.08, and for any stock really that pays out dividends, it goes right back in and buys more shares, in this case 0.01466 more shares of VXUS. We also received $230.81 from United Healthcare Group, ticker UNH. This is out of the healthcare sector. VXUS is an ETF. And that $230.81 we received for UNH went right back in and picked up 0.66562 more shares of United Health Group. Now, these new shares, or fractions of a share in this case, added an additional $5.90 in passive income over the next calendar year. And this is really the dividend snowball in effect, or whenever you hear people talk about compounded interest, this is really what they're talking about. So we owned shares of VXUS and UNH. They paid out dividends. Those dividends get reinvested. Those reinvested dividends add additional passive income, and that dividend snowball continues to grow as the positions pay out dividends, as I add new capital, when I add new capital, and as they raise those dividends over time. Now, even if I don't add any more to Vanguard's total international stock market or United Healthcare Group, that snowball will continue to grow. Obviously, if I add additional capital and buy more shares of VXUS and UNH, it will grow even faster. All right, now to the first new capital invested here on September 22nd, which was last Monday. We added $347.17 to the portfolio. We picked up 2 shares of Vici Properties, ticker VICI. This is a REIT out of the real estate sector. Picked that up for $31.91, so under $32 for shares, really where I like Vici Properties. I really love them to drop back under 30, but I don't know that we'll get there. But we did add 2 more shares under 32. 2 more shares to our Comcast Corporation position, ticker CMCSA, out of the communication sector. Picked up those 2 shares at $31.41. This is one we are and have been adding to in September. We will also look to continue to add that in October, as long as it's under my cost basis. 1 more share to our Union Pacific Corporation position, ticker UNP. Picked up that 1 share at $220.54. This one has bounced back. I probably will back off of this one as it's above the 220 that I like to get. I'd like to get it under 220. So probably maybe the last share, unless it drops back down for a while. Now, this $347.17, new shares picked up, added an additional $11.76 in passive income over the next calendar year. And we went back in on Thursday, September 25th, and I was up doing a little bit of fishing with some friends of mine. That is part of the reason I missed a couple videos this week, and also why I got in a little early. Usually I do my buying on Mondays and Fridays, but whenever I need to, I'll get in early and just finish out the week. So we went in Thursday. I knew I was going to be doing a lot of fishing on Friday, so didn't think I'd get time. But Thursday, we were sitting around the fire for a little bit there, about 3 o'clock. So I added $451.17 while I was up doing some salmon fishing with some friends of mine this week. And with those funds, we added 2 more shares to our SCHD, Strategic Schwab's Dividend ETF here. Picked up those 2 shares at $27.01. There's Vanguard's total international stock market, ticker VXUS. Picked up 1 more share there at $72.44. And 1 more share of Vanguard's total stock market ETF. This is the entire United States stock market, ticker VTI there. Picked up that 1 share at $324.72. And these will be our weekly buys. These 3 ETFs will be our weekly buys for a while. VTI, I'm going to run to 100 shares, or maybe to the end of the year, probably to at least 100 shares. And then I'm going to back off a little bit on that one and focus on VXUS and SCHD, maybe be a little more selective when I buy VTI. If it pulls back below my cost basis or there's a big pullback, maybe 10% or more in the overall market, I may add to that. But once I get to 100 shares, I'm probably going to be a little bit more selective. I'm not going to completely back off adding to VTI. I'll add to it whenever I see a little bit of value there. But I do feel like the overall United States stock market is pretty overvalued right now. But I want to get the position to at least 100 shares so that it can do its thing with the dividends reinvested, the drip there, but then focus on VXUS and SCHD and build those 2 positions out while VTI is overvalued. And then, like I said, maybe be a little bit more selective and hit the pullbacks on VTI over time. We'll see, but that's what I'm thinking about right now. But for right now, I'm going to at least get it to 100 shares, and then we'll kind of make that decision how we handle that one. Now, these new shares, the $451.17 added, and these new shares picked up with those funds, added an additional $7.16 in passive income over the next calendar year. Total invested, $798.34. Total passive income added for the week with the dividends received as well as the options premium, which we reinvested, and the new capital. $24, and the shares picked up with that new capital, $24.82 in total passive income added to the portfolio over this last week. Quick run through the sector weight updates here. Communications, 9.3% of the portfolio. Consumer discretionary makes up 2.89%. Consumer staples at 8.03% of the pie. Energy makes up 9.46%. Financials at 6.48% of the overall portfolio. Healthcare, largest slice of the pie at 17.02%. Industrials makes up 6.21%. Technology is at 15.95% in second place there. Materials makes up 2.36% of the portfolio. Utilities at 3.59%. REITs and real estate at 5.6% of the overall pie here. And ETFs at 13.10%. Eventually, this will be the largest slice of the pie just by the nature of adding to VXUS, SCHD, and right now VTI every single week. Now over here, you're going to see the same sector weight percentages that match up to the pie, as well as the dollar amount allocated to each sector and the total here at the bottom. All right, here is my portfolio. I do show this every single week. I think it's important for those of us in this space talking about finances to show you our portfolio every week so you can see that we are in the trenches with you. We are buying. We are not just talking about the market, but we are putting our money where our mouth is. So I show you all my individual positions, ETFs, individual stocks that I hold, how I'm doing, how the overall portfolio is doing. Hopefully it helps some of you out there who maybe have just recently started your portfolio. Maybe you're seeing some pullbacks in positions. I know some people originally or initially freak out whenever they see some of those pullbacks. It happens, right? I've got positions that are in the red. Stock positions go up and down throughout the course of the year for a multitude of reasons. Every position has a 52-week high and a 52-week low, and they could retest those 52-week highs and 52-week lows again for a multitude of reasons. Could be negative earnings, could be negative news for energy companies, for example. Could be a storm off the coast that impacts energy production for a certain amount of time. Could be a war broke out, and oil and gas is impacted in one sector of the world. A lot of different reasons why the market goes up and down. Negative news, negative sentiments, different sectors fall out of favor while other sectors are in favor. A lot of different reasons. So there is going to be fluctuations in portfolio. Sometimes positions pull back. If you've done your research, you're holding good companies, you've done a discounted cash flow analysis, have an idea of what you're willing to pay for the company, and it falls below what you thought the company was worth when you were buying it. Comcast, for example, if I thought it was worth $38.36, I should be buying more at $31.72. Pfizer, if I thought it was worth $27.03, I should be buying more at $23.76. Procter & Gamble, if I thought it was worth $154.93, I should be buying more at $152.50. SCHD is down right now, same thing. And that's that's an ETF, so even ETFs can fall below your cost basis and pull back. Valet, if I thought it was a good buy at $11.25, I should buy more at $10.70. VXUS, again, another ETF below my cost basis, down 0.11%. So just because a position pulls back, that is not a reason to sell if the fundamentals of that position are still intact, right? You should be buying more when you see those red days. That's whenever you want to load up on the positions that are good positions, that the fundamentals are still intact. Now, on the flip side of that, biggest winners, Lam Research up 75.84%, Google up 56.44%, and AT&T up 63.26%. OHI not too far behind at 42.46%. Same with Kroger at 44.19%, and Enbridge at 31.64%. There's some other ones in there, UNH up 25%. So overall, the portfolio is doing well. But again, I think it's important to show you the ups and downs of holding individual positions and ETFs. Like I said, two of the positions are ETFs that are down, SCHT and VXUS right now. So even ETFs can pull back at times. And that's the reason I show my overall portfolio. Now, this column, here's all the tickers in the portfolio, total shares, all of these numbers I updated yesterday on Saturday morning. Current price of each, market value here, average cost per share, purchase price, that does include reinvested dividends. Total return, whether up or down, you're going to see it in this column. Percent return, same thing, you'll see it here. Which sector each position falls in, whether they're a quarterly, monthly, semi-annual payer. We don't have any monthly payers right now, but we used to have a realty income in the portfolio. Current yield, as of the close of business on Friday. My yield on cost, portfolio weighting. I do have a rule in the portfolio. I do not want any one position to be more than 10%. I do not want any one sector to be more than 20 to 25%. Estimated annual income in this column, dividend growth year over year. Here I do update this as position update their dividends. That's also why you see these numbers highlighted in yellow. The ones highlighted in yellow have already raised their dividends for the year. So really we're only waiting on LenB. OHI, I'm not sure that they will. They haven't for a while. AT&T, I know they were not whenever I bought them, and I am not expecting it for another year or two, maybe three, for them to start raising that dividend again. Would love them to start it right now, but it doesn't look like they're going to do that. So dividend growth year over year. Payout months here, 15% of a 52-week low. Let me speak to that for real quick. I do want this column, right, all of these numbers, Chubb, for example, ticker CB here. My average cost per share, I want below 15% of a 52-week low. So 15% of a 52-week low for Chubb is $289.98. I want my average share price below that. Currently it is at $266.65. It's $280.89 right now. So I could still add to Chubb, right, because it's below 15% of a 52-week low, and my average cost per share is also below 15% of a 52-week low. That's all this column is. I use this to see where I want my average cost per share to be, or below that. All right, total shares 7,002.087, $433,000, $433,280.04 in market value. I have $365,778.55, including reinvested dividends into the portfolio. My total return, I am up $67,501.48, or 18.45%. I do not really focus on total return. I've said this, I think, every week. The reason I'm not solely focused on total return is because unless I sell out of all these positions, I do not lock in this gain. The only way to lock in the total return is to sell out of all the positions. I am not buying shares to later sell them. I am buying shares to hold them and collect the dividends and compound the interest over time. So that is why I say I'm not solely focused on total return. The portfolio salary currently per month produces $1,091.21, per week $251.82. per day out of a 365-day year, $35.88, and per hour out of 8,760 hours, $1.49 per hour if this portfolio was itself an individual working a part-time job. Current yield of the portfolio, 3.022%. My yield on cost, 3.580%. And this is what I'm focused on. That's why it is circled in red over here. The estimated annual income from all the different positions whenever they pay out dividends over the year sits at $13,094.47. And that number continues to grow as I add new capital weekly, as the positions in the portfolio increase their dividends, and as those dividends get reinvested, as well as companies increase their dividends year over year. So again, $13,094.47. And we should be over the $13,100 mark this week, and very close to over $14,000 in dividends by the end of the year is the goal. Dividend growth year over year, 5.91%. And that is really it. Let me know what's going on in your portfolio. Just about done with September. What are you looking to add as we roll into October? Are you focused on any individual positions? Are you looking to add any positions? Are you maybe trimming some positions? Maybe you're booking profits in some. Let me know. We'd love to hear from you in the comment section down below. And that's really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what is going on in your portfolio. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. Hey, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always seek the advice, counsel, a certified financial advisor.